Thanks for tuning in. Welcome to another live stream. Everybody in this market is wondering, when are we going to turn around? When will this bear market stop? And I think this chart over here might be a pretty good answer. What we see in this chart is how much we have drawn down in prior bear markets from the all-time high. So we had the drawdown in the very early days in 2011 of 93%. Then came the subsequent bull run. Then came the next drawdown. This was after FTX. No, this one was rather after Mt. Gox and after Terra Luna. So we draw down by 85%. Subsequently, the ICO bubble bust 83% and another drawdown by 76%. So you can see that from one bear market to the next, it seems like we tend to decline slightly less. Currently, we are nowhere near a potential bear market bottom. When we actually align those bottoms with this potential support, we can see how bad it could potentially be. So a drop from the all-time high of roughly 70%. How much is this? Let's have a calculation. So the all-time high was at roughly 125K, 126K. A 70% drop from that brings us down to 37K. So that's the potential risk. That's the potential bear market bottom if everything stays the way it is. And what I mean by this is we do not really know what's going to happen with traditional finance, right? We don't know if valuations of AI stocks will stay where they are. We do know that AI stocks and crypto tend to move in similar directions at the same time. So if suddenly we were to see valuations of traditional finance drop massively, then even comparisons to prior bear markets might not hold up. And then even lines like the one we've just drawn over here might be too optimistic. Now, another reason why I think that we're probably not yet out of this bear market is this chart here. This is the Bitcoin market drawdown in percent in the price in red, but what we have in blue, that's the realized cap drawdown. So this gives us an idea how much people are realizing their losses during a bear market. When the realized market cap is going down, people have realized losses. And in prior bear markets, they realized quite a bit of losses. So far, we have only slightly started. So the market hasn't really given up. There are some people that take profit, but there's also many people that have bought high that haven't yet sold. And so again, in prior bear markets, we tended to see much more panic. By the way, thanks again for tuning in. Very happy to see you here. Please give this stream a like. It will help to spread this in the algorithm. More people will start tuning in. Of course, if you haven't yet subscribed, that's also very much appreciated. But a like is very much appreciated. And as well, of course, any comment. So any comment that you currently give in the chat will also help the engagement rate, etc. So if it's simply just a hello from wherever you're from, if it's just a simple message, that's already pretty good. And of course, I also appreciate whenever there are questions been made here, right? So let's actually have a look at whether or not there are already questions. But yeah, good evening to the Netherlands. I'm in Malaysia, by the way. Hello to Switzerland. Hello to Harold. And greetings to Norway. Welcome. Nice to see you, John. Be humble. Great that you're here on the stream. Let's have a look at a few more data points. So, have a look at this here. This is the others dominance. And we could make the argument that in the early days, there was simply adoption of the altcoins. So the altcoins as a fraction of all of crypto tended to go up over time. At some point, that adoption has halted. As in, maybe we are now saturated in the market. Maybe now the altcoins just appreciate as quickly, at least in market cap, compared to Bitcoin and Ethereum. Others measures all the altcoins that are not in the top 10, right? So in the early days, we simply saw small altcoins outperform. But then over the last 6-7 years, that outperformance has halted. We can then also draw the following lines. So this is a support line. Here's a resistance line. And when we just look at the trading activity since we have been in those two lines, right? If we just take away the initial adoption phase, and then we calculate the average dominance since we've entered that trading range, we get to this dotted line here, roughly 9.75%. So maybe this is the long-term equilibrium now. So maybe the altcoins will now hover between being cheap and being expensive. And currently they might be somewhat cheap. And I think this is interesting. Why is this interesting? It shows us an explanation why recently, in the last few days, we haven't seen the altcoins getting sold off more compared to Bitcoin and Ethereum, right? Crypto in general went down quite a lot, but it was mainly the main cryptocurrencies, the larger cryptocurrencies that sold off. The smaller cryptocurrencies actually did not sell off that much. And probably one of the potential explanations for that is that the altcoins have already been comparatively cheap and that they're now simply just trading in a particular range. And so maybe there is, at least to a degree, a chance that the altcoins, comparatively speaking, at least in terms of market cap, will still hold up relatively well. In terms of prices, of course, they might underperform because there's token dilution, there's new tokens hitting the market. But just in terms of market cap comparisons, maybe even if Bitcoin and Ethereum continue to sell off, the very short term, the altcoins could still, comparatively speaking, sell a bit less. So keep that in mind in case you enter relative valuation shorts, in case you bet on falling altcoins, while at the same time betting on a rising Bitcoin, Ethereum, Solana price. There is a chance that at least in the short term, the altcoins will not sell off as aggressively. We've also seen this in our relative valuation trade vault. But I found this quite interesting, seeing how there might be a long-term equilibrium for how important the altcoins are within the ecosystem, that we are currently rather low on that. Hello, Tabau. Greetings to Germany. I'm originally from Germany. Hello from KL. Wow, Mats TT. I am very surprised you're already awake. It's 4:30 a.m. Maybe you're already awake or still awake. But yeah, nice to see that there's also people tuning in from Malaysia. Greetings from the UK. And hello from Algeria to Hicham 1985. I'm born in 1986. You are 1 year ahead of me. So yeah, why do I think that we have already entered a bear market and that this is not a bull market anymore? That is not just a correction within a bull market that has started when we entered at the 16K mark. The reason why I think so is, have a look at the percent supply in profit. It tends to go down as we're selling off into the bear market, obviously. What I found interesting with this current drawdown is that this time there's much more supply in losses compared to prior similar drawdowns when the price didn't go down that much. So what I mean here is more people tend to be holding through that price decline. In the past, people sold earlier, meaning that the supply in profit tended to go down less quickly. This time it's going down faster because people simply continue holding. I find this fascinating. Check this out. This is Bitcoin plus Ethereum plus Solana's market cap. And that market cap, so of the three major cryptocurrencies, relative to all these smaller cryptocurrencies. So that's the market cap of others, the market cap of the altcoins that are not in the top 10. We have seen over the last 3 to 4 years how the bigger altcoins tended to outperform the smaller altcoins, at least in terms of market cap. We have also seen that with the recent crypto crash, the smaller altcoins held up comparatively well. Now, how much longer could this last? I think potentially until we hit the support. So the smaller altcoins might still outperform by another 20%, or the bigger altcoins might underperform by another 20% over the next few days, maybe weeks. That's at least my quote-unquote worst case scenario for our relative valuation trades. So we want to bet on falling prices of altcoins most of the time because they are inflating. We want to bet on rising prices of the altcoins. that tend to have less token dilution. But in the very short term, this approach might be somewhat problematic, right? We might want to reduce our risk to a degree because, yeah, we are currently in negative momentum and we are still quite far away from the potential support. The long-term holders of Bitcoin are currently not the cause for this crash, and I find this quite fascinating. Usually we might consider that maybe it's just the very OGs, the people that bought Bitcoin for just a few dollars, that are currently dumping on the market because the momentum is negative. And while the long-term holders did sell into the rally, when we hit new all-time highs, they did sell quite a bit. Recently, they're not selling as actively. So it seems like it's mainly short-term holders that are currently selling. This value days destroyed metric, it measures what the dormant Bitcoin is doing. So the Bitcoin that hasn't moved for several years, the Bitcoin that is in the big wallets, right? So if you've got 100 Bitcoin and you haven't moved those 100 Bitcoin for 10 years, and then after 10 years you decide to move those 100 Bitcoin, you are destroying 1,000 value years, and that will spike up this metric. If you have less Bitcoin, or if your Bitcoin in general is moving more often, then this metric is not spiking up when you do transfers. So when this metric is going up, this is a direct reflection of people that usually do not touch their Bitcoin, that they suddenly do touch their Bitcoin, that they suddenly do move their Bitcoin. And very often, when Bitcoin has been dormant for a long time, it suddenly gets reactivated. That's selling pressure, right? People don't just move their Bitcoin for no reason. They move their Bitcoin after many years in order to sell it. And so when this is not going up recently, but the price is going down, that means that at least the current pressure that we see on the Bitcoin price is not due to the whales that have bought Bitcoin in the early days suddenly selling off. This sell-off is due to something else. And I find this always interesting to figure out what's going on, right? Because we can also see why Bitcoin didn't appreciate as quickly compared to prior bull markets. It was because the long-term holders sold off more aggressively during this bull market compared to prior bull markets. Greetings to New Zealand. When do you think Bitcoin will bottom? Yeah, we started off with that question in the very beginning of this video. A potential bottom could be once we reach the 70% drop from the all-time high, which turns out to be close to $40,000, potentially a bit below that. And that's assuming that there will not be a crash in traditional finance. If you were to enter a short perpetual trade now, what would be your stop loss level? Okay. So this is actually a quite interesting question. Where do I set my stop loss levels whenever setting relative valuation trades? For the long side, so let's say I go long Bitcoin, I don't have any stop loss, right? Because this is simply just my hedge. For the short side, I tend to set the stop loss depending on where currently the trend channel is. So I look at the relative valuation chart, and then I just draw trend lines and I check how much can we potentially wick out of those trend lines. I take a bit of extra buffer, and usually I don't want to set my stop loss beyond, say, 15, maximum 20% from the current price level. If you have to set a stop loss that's even further away than that, that's a problem, right? Because then we don't find a proper entry. Let me show you what I mean. So let's have a look at a chart. Let's take a random altcoin that tends to underperform very long term. So let's take a balancer, and I don't take the balancer price itself. I enter /others. So that's the others market cap. And then because TradingView has a few problems plotting very small amounts, I add a few ones plus zeros behind this so that the logarithmic chart doesn't have a problem. So this is then the chart that we get, balancer relative to the others market cap. Maybe we even find a balancer chart that's a bit more long term if we don't calculate this in Tether, but in regular USD. No, it's the same chart. But yeah, so here we can see a quite nice chart that makes sense to short, right? We want to bet on falling prices of balancer because it tends to underperform. And recently with the crypto crash, it went down even further. Now, I haven't looked at this chart for a while. I'm currently not shorting Balancer. It's not available on perpetual futures. You can, I believe, still borrow it on the Aave protocol. So if you want to borrow Balancer and then swap that Balancer versus Bitcoin and enter this short, you can definitely do so. But what you want to do is you want to draw charts like this. You then want to have a parallel line for the tops, right? You first look at where do you have most price points touching a potential trend. So you go from the line, it might be the bottom or the top, where you see a lot of price touches. Once you've got that line, you copy paste that line so you've got something parallel, and then you try to find the parallel line at the bottom. So this could be over here, right? Because we've got a turnaround point here. We can also look for secondary tops where you maybe have seen turnarounds before. So we've seen one here, and so this would be my potential profit taking, short-term profit taking, if we hit bottoms around here, and my stop loss when entering a short would be around here. Now this is not a great entry opportunity for a short, because very likely when we now measure this from the top, this is more than just 10-20%. Right, so we can't set a stop loss at 200% above the current price level. But in theory, right, if we were much higher on this chart, if we were before this recent crash at this level here, and we check how much could we go up, this here is 25%, that's already a bit too much. This here is a bit closer, this is around 8% or so. This makes more sense. We can then also have a look at the potential wicks. So Balancer does get sometimes short squeezed, it does get its wicks. So it did wick up 40% above. And so that's always a problem, right? So we can't really necessarily set a stop loss not to get wicked out at 40%. What we can do, if we want to get a bit fancy, is we can set our stop loss at the regular trend line, right? So let's say we are somewhere around here, we have a stop loss at around 10-15%. But then, just as a potential entry, right, in case we do see another scam wick like this, in case we do see another short squeeze, we could also, besides just entering the stop loss here, we could add a limit order to enter a short at price levels at around here. Okay, so maybe 30-40% above the current price level. So we would not expect to enter that short outside of a short squeeze, but if we do get short squeezed, right? So let's say we do hit our resistance level and it goes higher and higher and higher, then we would automatically enter another short at a higher price level because we've already got this in our order books. I personally don't do that often because it's quite a lot of management, because as the price moves, we also then have to adjust this short squeeze protection level. It is a bit cumbersome, but for assets that do get short squeezed every now and then, and Balancer at least used to be one of those assets, in that case, you do want to also have a short order laying around that's much higher above the current price level that then automatically enters. But yeah, very good question. I think this is important. Risk management is one of the most important things when betting on relative valuations, because if you do not manage your risk properly and you get squeezed out, right, when the price suddenly rallies by 100-200% and you've got, say, 20-30% of your portfolio in a single short position, then you might suddenly lose half of your portfolio. So you want to be wise in terms of how much you bet per relative valuation short, right? You don't want to bet more than, say, maximum 20% of your capital, ideally rather, say, 10% of your capital. That's one point. The second point is, of course, you want to have proper stop losses in place. And I do this for the short position. For the long position, I normally don't do this because the long tends to be Bitcoin, Ethereum, and Solana. And yeah, those tend to not crash that quickly. And if they do crash very quickly, then most of the times the altcoins will crash even further, and then we are still in profit anyways. So yeah, thanks again for the question. I think this is very good to discuss. Let's have a look at more questions. I think I enjoy these kinds of interactions. I enjoy your comments. Again, if you are new here, if you just tuned in, please give this a like. It will help to spread the channel within the YouTube algorithm. Yeah, we have 102 people watching right now. Thank you so much. Very glad that you're here. Good afternoon from Quebec. Why did you move to Malaysia? I remember you studied in Hong Kong. Yes, one of the reasons is it's simply cheaper. It's also nice, as in it's more relaxing. You've got more space. You've got your eternal summer. I like the weather quite a lot. I like the culture quite a lot. People aren't that stressed all the time compared to the big cities. If you do need to make money, if you do need to make money in the local economy, then of course you rather want to be in places like New York, London, Dubai, Singapore, Hong Kong. But if your income stream is independent of where you're living, then being in a low-cost country does make a lot of sense, especially once you've got more people around you that you have to take care of. I've got a family with 3 kids, and I need space. I need some time to relax outside of work, and Malaysia is perfect for that. If you've already got your capital accumulated, or if your income streams come from outside of the country, Malaysia is great, especially if you raise a family, if you're also concerned about political stability, if you're concerned about, say, for your kids, that there's no drug problem. Malaysia covers all of this. Other countries like, say, Thailand, for example, might be better suited if you're single and if you don't have to worry about your kids. Do you see the possibility of a 25K visit, especially given the political instability and the possibility that the US stocks could also decline sharply? Yes, everything is possible, and this is definitely also a possibility if suddenly we were to crash in the Nasdaq 100, especially if there's political instability. Let's say there is the potential that the US and China might clash more, and that maybe Taiwan gets into the spotlight, and that then maybe the chip manufacturing gets put into question. If we get all of those potential issues, then of course the AI stocks will suffer from this massively as well. The AI stocks are very much dependent on the supply of Taiwan. There are now some factories being built in the US as well, but definitely will be a big shock to the US AI system and to US stocks in general, but mainly AI stocks will fall. And if they fall, as per extension, because crypto is also a risk-on asset, it also benefits from the AI boom to a degree. If AI stocks are going to crash, then Bitcoin could very easily fall below any metric, any model that we used, right? If we look at prior drawdowns, if we look at the realized price, if we look at realized losses, at net unrealized profit and losses, if we look at all of those different models, they might actually not be representative of what's going to come in case traditional finance goes down. And really, since Bitcoin's existence, we've never really seen a crash. Let me show you what I mean, right? So in case you haven't seen this yet, when you look at the Nasdaq 100, so the index of technology stocks in the US, and you compare this to the US money supply, and you look at this very long-term chart. Bitcoin was created at the beginning of 2009. So over here, this vertical line, this is when Bitcoin started. Bitcoin started at the height of the global financial crisis, even as a response to the global financial crisis. So the very first block of Bitcoin that was mined had a reference to a New York Times article, how there was a bank bailout, a second round of bank bailouts. So the taxpayers had to pay for the banks. Everybody was angry at the banks. Everybody was angry that our money gets diluted for the elite. And so that's why Bitcoin, as the hard money that can't get diluted, was created. At least that was one of the reasons. So Bitcoin didn't just not directly experience this crash, it was born out of the global financial crisis, out of this crash. What we see over here, that's the dot-com crash. And we are, of course, now very high. We are at very similar levels to the dot-com levels. We are above those levels. The difference right now compared to dot-com is that the appreciation isn't as quick, right? So in the past, when we had this dot-com bubble, within just 2 or 3 years, the Nasdaq 100 4x, so it made a gain of 300%. Now it takes much longer for similar gains to happen, right? It takes 10 years or more than 10 years for such gains. So the acceleration isn't as quickly, the appreciation is as quickly, we aren't accelerated in the appreciation as quickly. So there might be an argument that maybe this time is to a degree different, that maybe this time we aren't as heated in the market, but valuations are definitely very high. The question really is, when valuations are high, will this bubble pop? And I don't have a good answer to this, because during prior bull runs, right, and during prior crashes, especially when we look at the global financial crisis and the dot-com crash, both of those crashes were actually induced by a lack of additional retail money coming into the space. So we had our regular appreciation, then retail investors got more and more hyped around the space, and retail investors bought into the hype. And at some point there was a saturation point, there was no additional retail investors getting in. And when that saturation point was hit, then growth stopped and then valuations came down. This time, a lot of the AI infrastructure is backed by technology companies. And while the technology companies themselves, right, like say the Metas of this world or the Googles of this world or the Amazons of this world, while they have high valuations and while they get bought up and obviously have better financing due to that effect, mainly we see purchases of AI infrastructure build outs. We see mainly the investments of AI from the cash balances of technology companies. So cash is actually financing a lot of this AI. And that's the difference this time. That cash might not run out as quickly, and that cash might be better managed compared to just the masses, compared to the retail investors. And so the source of this rally, the source of those investments is different this time compared to what we had during .com, compared to what we had during the global financial crisis. And that's why it's unclear whether or not this bubble is going to pop. I am not betting on the bubble to continue to expand. I don't think this is a great deal. It's very cheap to buy into technology stocks. But yeah, if we were to see a crash, which is uncertain, we might, then of course Bitcoin could fall much, much further. What do you use for automated purchases? Dabbling with 3 commas at the moment, but seems to be somewhat lacking features. I do not do any automated purchases because I don't want to be exposed to another platform that might potentially get hacked. Every additional technology layer that we add is a potential attack vector. And when amounts get higher and higher, the question is always, is the convenience worth it? Right? Am I willing to add this additional discount potentially to my future returns because I'm adding this additional risk for a little bit of convenience? And I'm okay to do some manual tasks every now and then to not be exposed to the risk. Hello from the UK. Love the videos. Thank you so much. Welcome to this stream. Very happy to have you here. Let's continue with a few more charts that I've prepared. So check this out. This is Bitcoin's long-term price chart on a logarithmic scale. What's actually the difference between those scales? This is a linear scale, right? So this is the regular price scale that everybody knows. We have a 5K difference here with every horizontal line. Once we look at a logarithmic scale, we have not fixed dollar amounts that change here with every horizontal lines. We have percent changes that change with every horizontal line. So in this case, it's roughly 60% or so, right? With each horizontal line that we increase. Why is this useful? It's useful because it tells us not just where the price of Bitcoin is, but how much percent gains we can make. And when you look at this curved line here, we can see that in the early days of Bitcoin's existence, the percent gains that we made were much, much higher compared to the percent gains that we now make over the long term. And that makes sense because Bitcoin is maturing over time, right? There is less and less adoption, relatively speaking. So it's harder and harder for Bitcoin to double and double and double again because it's already that large in terms of market cap. And so it's to be expected that the upside gets more and more limited. What I find interesting though is that the appreciation obviously is slowing down, right? There are diminishing returns. from one cycle top to the next. But what I also find interesting is that the downsides, right, the potential risk that we take with Bitcoin, while also diminishing, it seems to be diminishing much less over time. So the bear markets are almost as bad as they used to be in the early days. They're only becoming slightly less severe over time. But the gains that we make with Bitcoin, they clearly go down. So in other words, very long term, the risk to reward of Bitcoin is worsening. And it's interesting, right? This here is just a curved line. There's nothing mathematical about this. But still, a single curved line can connect those tops quite well. We can make a similar kind of analysis for the bottoms, right? A single curved line is connecting all of those price bottoms relatively well. But what's also interesting is that when we draw both of those lines onto a chart, we're getting this. And this is clearly not parallel, right? So there is more curvature in the line at the top than there is at the bottom. So at some point, those two lines have to cross. But it does give us a certain idea of where we potentially, if everything stays where it is, might bottom and where we might potentially peak. And when we take this measure, how low could we go? We're also getting to a level of close to 40K. A very similar level that this line here implies, right? The number that we came up with at the very beginning of the stream, 37.5K. It's very similar to what this support line gives us, right? Something around the 37, 38, 39K mark. That's potentially where a bear market bottom could be, right? We do not have a crystal ball. We simply just use prior price developments and take this as potential reference points. Many altcoins are currently sitting right at their all-time low or key support levels in US dollar valuation. When you're opening a relative trade, do you factor this in? The answer is no, I don't factor this in at all, because a lot of the liquidity for most altcoins is directly tied to the overarching cryptocurrency as well. So let's say you've got a meme coin. Let's say you've got Pepe, for example. Pepe is highly correlated to Ethereum because it's listed on the Ethereum chain. So when Ethereum goes down by 10%, then Pepe will also go down by 10% automatically without a single trade ever happening. And that's because the liquidity on chain is directly matched with Ethereum. In other words, Pepe is actually not valued in US dollars, it's valued in Ethereum. It's the ratio between the number of Pepe tokens in the liquidity pool versus the number of Ethereum tokens in the liquidity pool that's determining the price of Pepe. That's why there's all this correlation. That's why everything goes up and down at the same time. It's simply because the major cryptocurrencies, Bitcoin, Ethereum, and Solana, they're going up and down based on various reasons, right? Based on ETF demand, based on demand by treasury companies, based on supply by, say, the long-term holders that are selling. So the major cryptocurrencies, they go up and down, and then many altcoins are simply directly tied to the price movements of those major altcoins. So that's true for Pepe versus Ethereum. That's true for, say, the Trump token, the Trump meme coin on Solana. So we see this connection for pretty much any altcoin, because most altcoins are directly tied to a particular ecosystem. And so really, when we see a support in US dollar price charts, it doesn't really mean anything in terms of potential price supports, in terms of potential diminishing sell pressure. I just look at the relative valuations, and I tend to work with this relatively well. It tends to work pretty well. The supports, the resistances work relatively well. We can see how money flows in and out of the altcoin relative to the overarching altcoin. And sometimes this is a bit problematic. Let's say we've got an altcoin that's relatively equally spread in terms of liquidity across several big alts. So let's say we've got an altcoin that's traded versus Solana and versus Ethereum. What should we take as a benchmark? Then I simply just take the others market cap. So look at the price of that altcoin relative to others, and that works quite well as well. But yeah, the US dollar price charts are really not useful. I don't even open them anymore. I don't look at them at all. But yeah, thank you very much for the question. John, be humble. It's very much appreciated. Terry Makasi, Berhard. Yeah, that's Bahasa. That's from Malaysia. I lived in Songkhla in Thailand for a while and visited Penang a lot. It's damn hot, but very nice. Yes, true. It is hot, especially in the afternoons. So if you go running in the morning, you want to go running in the morning or in the late evening. You don't want to do this in the afternoon or during lunch hours. It is quite hot. There's no low for altcoins. I tend to agree with that. But there are sometimes altcoin seasons, right? Let's talk about a potential altcoin season now. Actually, that's a good next thing to discuss. So yeah, there is no low for altcoins. Have a look at this here. So what we see at the top, that's the others dominance, right? How much of all of crypto is currently in the altcoins, and what we see at the bottom, that's the Bitcoin price. Now, the green areas, that shows us when we have altcoin season, right? When the altcoins tend to outperform the rest of the market. We want to be in altcoins during those kinds of times. This is an outperformance of smaller altcoins of 1,700%. And what we see over here, that's an outperformance of the altcoins of roughly 300%. So when was it right to be in the altcoins? When was it a good time to be in the altcoins? When was it a bad time to be in the altcoins? When we look at the Bitcoin price here at the bottom, we can see that Bitcoin has finished a bear market here. It came actually from $2,000, so we don't have the others dominance for the early price data. But Bitcoin had this massive crash, right? The 90% crash. But then it consolidated for roughly a year, and it went up by 150% already. So it was quite clear at that point in time that the bear market was over, that we wouldn't fall any further. We've already consolidated for a year, we've appreciated. The massive decline that we saw prior has stopped. So after we have come out of a bear market, then when that bear market reversal was already confirmed after a year, then the altcoins outperformed. So it was another way to go more risk on, to take advantage of the future price rally. When did they stop to outperform? They stopped after the bear market was confirmed. So when we have rallied a lot in Bitcoin and subsequently turned around, and we already by that time crashed by roughly 50%. From the all-time high to the bottom, we already went down from 20K to 10K. Once we had the confirmation that the bull market was over, that's then when subsequently the altcoins sold off. The same is true afterwards, right? When did we get altcoin season? When did the altcoins outperform? It was after the reversal. So we had our bear market, we had our roughly 80% decline in Bitcoin, and then 1 year afterwards, when Bitcoin went from 3.5K up to roughly 10K, 11K, after we have seen that rally, that's when the altcoins outperformed. So there seems to be a delay happening here. When should we again exit the altcoins? It's after the bull market has ended, right? We have gone sideways already for more than a year in Bitcoin. And that's then when the altcoins subsequently went down. We've already come down in Bitcoin by 40% this time, but we went sideways for a longer period. So it seems like we need some kind of confirmation of the current trend for the altcoins to make its moves. When we have come out of a bear market and we've already appreciated in Bitcoin for roughly a year, that's then after the appreciation when the altcoins go up. When do the altcoins start to underperform? It's after when the bull market is over, half a year after that, or maybe 1 year after that, when we start to come down. That's then after that 6 to 12 months, when then the altcoins sell off even further. So it seems like there is an interesting delay happening here. But what I also find interesting is have a look at the red boxes over here, because this is where things changed this time. We came out of a bear market, right? We hit the 16K low in Bitcoin and we appreciated. And we appreciated for, again, 6 to 12 months, and we hit the low in others dominance. And as we anticipated, right, we should then outperform with the altcoins. But what's interesting this time around is that the altcoins did not continue to outperform. This is what they used to do in the past, right? As long as the bull market continues, the altcoins should continue to outperform. Not this time though. This time the altcoins suddenly became weak again. And so this might be a structural shift. And so this might be an answer to this question. Will there be no low for altcoins ever? And I have to potentially agree with this. When the situation is ideal, when the setup is ideal, and we are in a not very quick, but we are in a bull market, and the altcoins still cannot outperform well. What does this mean for the future, right? If conditions even worsen, if we enter a bear market, will the altcoins really perform that well? I've got my doubts. I have an explanation why we are here in the reds, why the altcoins aren't outperforming, and that's simply because Bitcoin didn't appreciate quickly enough. Because why do the altcoins outperform? Why is everybody buying altcoins? It tends to be new investors that enter the space, that try to find the next altcoin. Right? So let's say Bitcoin has already appreciated, Bitcoin is in a bull run, made a multiple X return. At that point, it's probably already at an all-time high. New people see this, right? They see this in traditional media. They're considering, what should I buy now? Should I buy Bitcoin as well? And then comes the doubts, right? When Bitcoin is already at the all-time high and Bitcoin has historically dropped in bear markets by 60, 70, 80%, when there's so much risk in Bitcoin, maybe I do not want to be the sucker that's late to the party, that's buying at the all-time high to then see the price coming crash down. So what tends to happen is that people don't see enough potential reward to buy Bitcoin at those high prices. They do want to enter the space though, because things are going up. And so when that's the case, new people enter the space, and those new people tend to buy the smaller altcoins. They have smaller prices, and smaller prices seem to reflect more potential upside. At least that's the thinking of many people that enter the space. And so that's probably what went on during old altcoin seasons. This time around though, the Bitcoin appreciation was not quick enough. The Bitcoin appreciation was slower compared to what technology stocks did. It was also slower compared to what gold and silver did. And so all of the attention by the average retail investor, all that attention went to Nvidia stock, all of that attention went to silver. It did not go to Bitcoin. Traditional media was not inclined to talk about Bitcoin's all-time high when Nvidia appreciates much faster, or when silver appreciates much faster. So you probably hear many people that are not in the space, that aren't really trading actively, that aren't thinking about their investments that actively. You probably heard some of those people asking you, when they know that you are in that game, should I buy silver now? They're asking you about silver, they're not asking you about Bitcoin. And so that's simply just a reflection of that. If the crypto market is not appreciating quicker than any other asset class, then we've got a problem. Then the altcoins have a problem. Then the altcoins cannot outperform, because the altcoins, they thrive on new people entering the space. And that's why I think this structure has changed. That's why, even though we came out of a confirmed bear market, we did not see the altcoins appreciate further, but instead they underperformed, simply because there was not enough attention. We can also see this in the number of search queries. And so the search queries did not hit new all-time highs. During prior bull runs, we saw how search queries for crypto hit new all-time highs. This time it was just the old people coming back. So yeah, I find this quite noteworthy. Let's go to some more questions. Again, if you're new here, if you've just tuned in, feel free to give this stream a like. It will help to show this to more people. And of course, any comment here, not just questions, are very much appreciated. Any chat message that you can put below is very much appreciated. It will bring more people onto the stream. Which would be your favorite vaults for starting to dollar cost averaging now? So that's referring to the copy trading vaults for the premium membership, right? So there's the automatic copy trading, where I share how we follow the trend in Bitcoin, right? The historically best moving averages in Bitcoin. So where we also follow the best moving averages in Ethereum, and where we then short the altcoins, relatively speaking. very short term, of course, the altcoin relative valuation trades can potentially perform a bit poorly, right? We've seen the bad performance of Bitcoin, Ethereum, and Solana versus the altcoins in the last few days. So there is the potential that relative valuations will suffer for a bit longer. But we never know, right? We can also turn around. Like I could have said the exact same thing in September of last year, and then suddenly we started rallying again. So there is some risk in relative valuation trades. That being said, the main decision point should be, what do you actually want to achieve? Do you want to have returns that are independent of the general macro? So do you want to have no exposure to Bitcoin going up or down, simply making money by the devaluation of altcoins? So if your target is just US dollar gains with hopefully not that much risk, then the relative valuation trade vault is for you, right? So that's for all the annual members of Premium. If you're long-term bullish on Ethereum and you want to take advantage of the strong trends that we see in Ethereum, and you're okay to take quite a bit of risk, then the Ethereum trend following is the best, because that historically through the backtest had the highest outperformance. The target for the trend followers is not to make US dollar gains. The target for the trend followers is to make gains versus the underlying. So let's say Ethereum crashes by 50% and this vault just stays flat, then this is a gain. Then this is good for us, right? Because we have doubled our stack measured in Ethereum. So we want to just outperform the underlying with the trend followers. The outperformance for the Ethereum trend following was historically more than 200% APY. The outperformance versus Bitcoin on the Bitcoin trend following was more than 100% per annum. So we more than doubled our Bitcoin stack on average with those trend followers. So it really depends on, do you want to accumulate more Bitcoin long term? Do you want to take advantage of more trends, more levered moves through trading Ethereum? Do you potentially also want to hold Ethereum long term? Or are you not interested in any long term crypto exposure at all? Do you think that crypto will crash over the next 5 to 10 years? Everything is over. In that case, you probably do not want to have long-term exposure to Bitcoin, right? If Bitcoin was to crash by another 99% and we just keep our capital, it would be great for this vault, but it would not be great for your investment thesis. So in that case, if you just want to have US dollar gains that are in percent terms lower historically, but that aren't dependent on the general macro, then it's the relative valuation trade vault. Hope that explains a few things. So the monthly membership gives access to the Bitcoin and Ethereum trend following. The annual membership also gives access to the relative valuation vault. And the platforms, I sometimes get asked this as well. This is not necessarily answered in many of the videos that are published. The vaults are on Hyperliquid, so that's for Bitcoin and it's for relative valuation trades. They're on Hyperliquid, the largest of the perpetual futures decentralized finance platforms. And the Ethereum trade vault is on Gravity. And here's also the cost associated with this. You have a deposit tax for the Hyperliquid related vaults. That's a 5%. And you've got a profit share of 10% for all of those vaults. So if you're doubling, measured in US dollars, your capital, then 10% of this 100% that you made will be taken as a profit share. Okay, let's look for more questions. With potential crash with all these elevated prices across assets, are you holding cash at all to benefit from this event? Yes, I do. I have a lot of cash right now. My cash allocation is very high. And with cash, I of course mean fixed deposits or something that still returns percentages, right? I still want to get some return. I don't want to get diluted from the monetary base entirely. When you look at the very long term of USM2, right, this is a logarithmic chart. It tends to go up almost like a straight line. In other words, the monetary base tends to expand pretty consistently. On a linear scale, this looks like a very quickly accelerating rising line. And this is appreciating by 6.8% per annum, right? So this is how quickly the monetary base is devaluing. And that's always the argument why we should buy assets. And it's a very valid argument, right? We have to buy something in order to not get diluted by 6.8% per annum. But what this also means is it gives us a good measuring stick. So if we have a fixed deposit and that returns 4% or even 5%, then yes, we do lose money. We do get diluted year over year. But if you have 5% versus, say, 6.8%, you're really, quote unquote, only using 1.8% per annum. And then the question is the volatility high enough that you can justify a loss of 1.8%? Do you think there will be potentially an entry opportunity where prices drop by more than that? If you think that valuations are currently high and that we might drop below current price levels, then having a high cash allocation, I think, does make sense. And it doesn't even have to be a particular asset. So that's actually what many people, I think, get wrong. Many people just look, say, at the stock market and they say time in the market beats timing the market. And many studies have been made around this, right? So many people really say actually that you simply just dollar cost average into the market. You should invest into your 401k. You should just forget about the price movements and allocate towards that. And it does make sense if you just look at one asset class. So if you just decide, should I be in cash or should I be in stocks? And then you try to time the market because you think stocks are currently super expensive. Thus, I have a lot of cash. That's probably the wrong way to go about things. But if you've got a diversified portfolio, I think a cash allocation should be part of that portfolio if valuations of all other asset classes are currently high. So we're actually not waiting for the crash of, say, the S&P 500. We are just waiting for a crash or for a reduction in valuations for any of the asset classes that we are holding. So if any asset class becomes cheap, so let's say that's Bitcoin or that's stocks or that's property or that's precious metals, if anything that we currently hold suddenly goes down in price, then we can buy that bottom. Then we can buy that bottom with either something that had appreciated a lot that we don't want to have that much exposure to, or we can buy the bottom with our cash allocation. But cash is a good addition to a diversified portfolio to take advantage of bottoms, especially if your net worth is high. If you've got several years of net worth, you want to have somewhat of a diversified portfolio and you want to allocate the weighting of different asset classes based on what's currently very cheap versus very expensive. And yeah, if currently you see most things being expensive, then having a large cash allocation, I think, does make sense. And we're not waiting for the stock market crash. That's what most of those studies get wrong. We are just waiting for something to crash. And something can very easily crash at some point, right? So we don't have to wait that long. If there's 4 different asset classes that aren't that highly correlated to each other, the frequency on average of those crashes coming is 4 times higher. And so that's why it's okay to sometimes be in cash, to lose, say, 2% per annum versus monetary debasement. That's fine. Because something in the next 3-4 years is probably going to come down, and we already see how Bitcoin has come down 50% from the all-time high. So having some cash allocation has been quite wise, because now you could potentially already start buying Bitcoin if you wanted to. Of course, I still bet on falling prices, but let's say we were to go above the best moving averages in Bitcoin and Ethereum. If suddenly the momentum turns bullish again and we stay close to the realized price, then I might also add some allocation again. But yeah, that's, I think, is the best approach now. We want to make sure that we don't panic around holding some fiat. We want to have some physical precious metals. We want to have, if we can, some property. We want to have many things, but at the same time, we want to adjust our weighting. And having some cash is also fine, because sometimes we also get a liquidity crunch across all asset classes, right? If you still remember the COVID crash, during COVID, even gold crashed quickly because everybody needed cash. And so if you've got some cash, you can buy the dip in gold when COVID crashes. Of course, when there's a crash, then you want to buy the thing that crashes the most. You don't necessarily want to buy gold. But that's why moving from, say, gold in order to buy Bitcoin can work in regular market environments, but it might not work during a flash crash, because during a flash crash everything sells off and then cash is king. There are situations in the market where cash is indeed king. But yeah, thanks very much for the question. I think most people get this wrong. Most people are too afraid to hold cash. And I do think that situations like this are the right ones to be a bit more cautious with risk on allocations. Do you think there'll be a proper relief rally before reaching the bottom of the bear market? And when will you start to DCA? I will start to DCA once we are below the realized price. So that's when I might start to buy into my long-term spot holdings, right? My native Bitcoin. The realized price is currently at 55K. So I'm not trying to time the perfect bottom whenever allocating to anything, right? I sell into a bull market, I buy into a bear market. I have not yet bought into this bear market because we are below the moving averages. We still have negative momentum, but I would buy some once we go above the moving averages, but I would buy against the momentum trades just for my native Bitcoin once we fall below the realized price. And I do expect the price then to fall even further, but that's okay, because nothing is certain in Bitcoin, nothing is certain in markets in general, right? We might just hit the realized price and then very quickly turn around again. And then I will always hate myself for never having bought anything at all when prices drop by more than 50%. So this is also a bit of a psychological game. You never want to be too deterministic about the future. You just want to adopt based on current valuations. And currently, of course, valuations are much better compared to a few months ago. And so as per tendency, you should be set up a bit more bullish. You should ideally own more Bitcoin today than you did a few months ago. Right? So that's the idea. You want to have a lot of Bitcoin when we are low. You want to have very few Bitcoin when we are high. As we go down, right? It's not just even, it's not a projection thing. It's just a thing about looking at the past. As we went down, as we are not at the all-time high anymore, you want to have more and more exposure potentially. I'm simply buying when momentum turns around or when we are low enough and we hit a potential bear market bottom. Thanks for your answer regarding the automated trading. Did not expect that. So I guess your opinion on trading bots in general then is just don't do it simply because of automation risk. Yes, that's correct. That's exactly how I see this. Unless, of course, you've got the technical knowledge to write your own bot, right? So if you use very simple libraries, you don't use anything that's been programmed by somebody else, but you use out-of-the-box libraries that can be used for anything, not just for crypto, and then you build your crypto bot on top of that, and then you host this in your own cloud, and you know how you've secured that cloud, and all the mistakes that might come from technical vulnerabilities are then on yourself, then it might make sense to do this, right? You know exactly where the risks are, you have a feeling for the risks, and you know that nobody else lost the money for you. So that's a potential way to do it. If you have the technical knowledge to build a bot, there's also some videos in Premium around this. I built some trading bots in the early days with Ethers.js and Web3.js. So that runs on Node, and then you just deploy this, say, on Amazon Web Services or DigitalOcean. You can do this. It's not rocket science. Now we even have AI. I did this before AI, but now we even have AI, so you can even try to build this with AI. If you understand every line of code, and you don't just copy and paste, but you actually understand what's going on, and you maybe let also AI scan this for potential vulnerabilities, and you make sure you update the softwares regularly, that you don't have any dependencies that are outdated. If you do all of this, then of course it makes sense. If you don't, if you're not technical and you don't want to put in the time, then I think using other people's automated bots, I think, is not very wise. At least I personally don't do it. I have the theory that the market will go up if everyone likes this video. I very much appreciate if you like this video, of course, but the market doesn't have to go up. I'm actually happy if the market goes down because we're currently shorting the market. So it's fine, right? The market just needs to have a trend. If it's up or down, I don't care. As long as there is a trend, we can make money in both directions. Don't be too deterministic about a certain market direction, right? Just make sure you ride the market with rules that work for you. Just wondering if going forward, we'll only choose a few alts every rally. I'm not sure if I get this question correctly, but I think the idea is maybe there's only going to be a few alts that will rally in the future, not the entire altcoin market. That's definitely possible. It's also what happened in the last 1 or 2 years, right, where it's just the meme coins that outperformed. There's always a certain narrative where certain altcoins do better than the rest, and altcoin returns tend to be very concentrated as well. There are a few altcoins that make 10, 20, 30x, and there's many altcoins that barely move, even during an altcoin season. How can XRP go down to $1 or lower? By people selling, by the insiders selling, by token dilution, right? The Ripple Labs, they issue new tokens, they sell XRP all the time, finance the operations. That's how XRP can go lower. Altcoins don't make sense to me. It seems like most retail investors buy alts. Why do they move the same as BTC? They don't move the same as BTC, they move the same as Bitcoin and Solana. They move the same as Ethereum and Solana because they're directly bound via the liquidity pools. Let me show you this actually. So let's go to dexscreener.com. Let's go to, say, a layer 2. Let's go to Ethereum here. So this is Ethereum. Let's look at the most liquid tokens. The most liquid token on the Ethereum chain that's trending is Pepe, and or Pepe. I'm not sure how to properly pronounce this. I always get comments that I pronounce this wrong. But have a look at this. This is Pepe or Pepe relative to wrapped Ethereum. So the price, which is many zeros until we hit the actual numbers here, the price is determined by the ratio of the liquidity pool versus wrapped Ethereum. When we click into this, you can see the details of that liquidity pool. So you see there is 3 trillion Pepe in the liquidity pool worth 13 million. And there is 6,800 wrapped Ethereum also worth 13.3 million in the liquidity pool. So on Uniswap, V2, those two numbers are always the same. So whatever we have on the one side of the liquidity pool, in this case the altcoin, and the other side of the liquidity pool, in this case wrapped Ethereum, that's always equal. And it's the ratio between those two assets that determine the price. So if you were to buy Pepe, right, you want to buy Pepe in this case. What's happening is that in decentralized finance, whatever you're swapping Pepe into will first be converted into wrapped Ethereum. And that wrapped Ethereum will be converted into Pepe. So what's happening is that when you're buying Pepe, you get Pepe in your wallet. The number of Pepe in this liquidity pool will go down. And because you bought this with wrapped Ethereum, at least indirectly, the wrapped Ethereum will end up in the pool. So there will be more wrapped Ethereum for the number of Pepe. And so the ratio of Pepe to wrapped Ethereum changes. The Pepe price goes up. That's how the price is determined. The price is determined by the ratio of wrapped Ethereum relative to the altcoin. If wrapped Ethereum comes in and out of this liquidity pool, that's in the end what determines the price. And so when you're asking, I don't get why the altcoins move the same as Bitcoin. They don't move the same as Bitcoin. They're actually much more correlated to Ethereum and Solana. And the reason is, when Ethereum goes down by 10%, then even without a single trade ever happening, Pepe in US dollars also goes down by 10% because Pepe is priced in wrapped Ethereum. It's not priced in US dollars. That's really fundamentally what's going on with pricing of altcoins. And it's the same for most liquid altcoins, even for the ones that are on layer 2s. Let's say the base chain, right? The base is a layer 2 on top of Ethereum. Not all liquidity pools are, of course, versus wrapped Ethereum, but many of them are. And that then, of course, has an impact on those altcoins. And Solana, it's, of course, versus SOL very often, right? Many of those altcoins trade versus SOL versus Solana. When Solana goes down, those altcoins automatically lose to the same degree. Hope that clears some things up. you have sound issues. I will scroll now to the bottom of the chat. Please let me know if you also experience sound issues or if the sound is okay on your side. I noticed in a recording for the last stream that there was some cracking in the sound, but I've changed the encoding of this stream now to use the GPU instead of the CPU. Please can you chat right now, type below whether or not you experience sound issues. If there's any problem with the sound, please let me know, then I will check this in more detail. No, not anymore, sound okay. So there used to be a sound issue, or you didn't experience any sound issue at all at any point? Sound okay now? It turned okay at some point again. So was this crackling? Was there some cracking in the sound, or what was the issue with the sound? Sound is all good now. Yeah, I'm just wondering if it's okay now. But it was bad for what, 15 minutes? It was crackling. Fuck. Okay, so yeah, if you guys if anybody knows how to solve this cracking issue, I already asked AI about this. But couldn't really figure this out. I have a relatively strong computer. The CPU and my OBS says it's only 1.3% CPU usage. Okay. I will just have a look at the recording again and see what's going on there. But I have to figure this out. This is of course not great at all if the sound has an issue. Okay, let's have a look at a few more questions. Your mic crackles, yeah. Robot voice. Robot voice sounds more like a bandwidth issue. Ah, I still have my VPN on. That's why. Ha. Good. 1 second. I have a little checklist here before going live. In the future, I will turn off my VPN. That might have been the reason. If it's robot sound and not, if it's cracking, it's probably the CPU. If it's robot sound, it might be bandwidth issue, and that might be the VPN. Microphone is broken. I don't think the microphone is the issue here. Would be surprised. It's like he's underwater. Your mic. Yeah, I should check. Sorry, I should check the chat more frequently. Yes. But still very happy. Like you guys didn't leave at least. The mic was broken and there's still 190 people watching here. So thanks for that. I think I would have already clicked away. Let's look for any more questions here. Do you think there's any possibility left in the lengthening cycle theory and we are just in a drawdown that leads to Bitcoin having a final blow off top this year? Or has the breakdown killed that? I think the breakdown has killed it. I don't think most people don't believe in a bull market anymore, and very often things become a self-fulfilling prophecy. Right? If enough people think that we have topped, then we did top because nobody wants to buy at high prices. If enough people think we are low in prices, then the selling pressure will ease, people start to buy, and that just becomes the truth. So on the macro scale, I do believe in the self-fulfilling prophecy effect, and most people still believe in the 4-year cycle, and so we probably continue to run a 4-year cycle for a while. A blow off top, I believe, is also quite unlikely because these accelerated moves usually only happen when a lot of new people enter the space, right? We've seen this with Bitcoin in the early days, we've seen this with Nvidia stock, and we've seen this with silver recently. So the charts look interesting. Even on a logarithmic scale, they're accelerating. So the growth rate itself is increasing. And that's usually a sign when the market is totally heated and when then at some point we turn around. But again, this is when the market is heated, when new people enter and when more and more people enter and when price appreciation becomes viral, right? When it's suddenly the topic of everybody, should I buy A or B or C, because the appreciation of A and B and C is so quick. That's when there's some reality, when the trend is your friend, and when there might be blow off tops. But of course, Bitcoin did not appreciate as quickly because the long-term holders continuously sold into the rally and muted the rate at which Bitcoin appreciated, and so AI stocks were appreciating quicker, and so silver also appreciated quicker then. If you are a newbie investor and have 50K and looking for at least 5% return a month, where would you invest? Please explain like I'm a 5-year-old. Okay, so you might have already noticed by my intonation of the question that 5% return per month is a very high ask. Most people achieve this in a year. Even Warren Buffett in his golden time did not beat the S&P 500 by that much. His annual alpha in the early years, up until the 1980s roughly, was between 20 and 30% outperformance versus the S&P 500. Now, if we are in a market that's less efficient than the stock market, that's smaller, like the crypto market, and we are good, we can generate more alpha. But if we don't want to risk all of that capital, so it also depends a bit on how much the 50K mean to you. Let's say you've got an annual income of 200K and the 50K is just a few months of savings, then you can go quite risk on, and even if you lose it all, it's fine. You just wait a bit longer, you just save a bit longer, and you're back. If your annual income is 25K, and this is several years of saving, then the 50K mean much more to you, and then you should already diversify this relatively well. I personally, in the crypto market, over the last 5 years, made a monthly alpha over buying and holding Bitcoin of 2.1%. So that's my return, and that's relatively risk off, I'd say. So I try to be within the crypto portfolio, try to be quite diversified, try to not take too much risk, but I'm also doing this full time. And for my entire net worth, of course, it also depends on what you measure this against, right? Because it's an asset class mix. In US dollars, of course, I make more than 2% per month, but the NASDAQ also appreciated quite a bit in the last years, and property also appreciated quite a bit in the last years. And then we've got leverage in property through mortgages. So yeah, it's always the question, what's your benchmark? If you just look at crypto and crypto is your investment, try not to have your expectations too high. Try to start with relative valuation trades if you want to. If you've got a longer time horizon, you can also try to time the market using the moving averages, right? The 125-day for spot trading, or if you do some leverage, the 44-day. And just do that, and then continue learning, right? Continue learn as much as possible, not just this channel. Try to find channels that you think have somewhat of an objective approach, that don't just chill random altcoins, that don't just hype the market, but that actually have some kind of quantifiable approach to things. Maybe try to find another approach how to beat the market, right? So that's my personal approach. My approach is to use data. But many people outperform the market with very different approaches. They are the networkers, right? So if you were to say, network with a lot of people in the space, you talk to many people that launch crypto projects, you have a direct connection with them, they become your friends, you meet them face to face, you have dinner with them, etc. You will get information that the vast majority of the market will not have. And while insider trading is a problem in traditional finance, the boundaries are not as clear in crypto. And the enforcement in crypto is also very different. And so there's many people that simply made money without any analytical knowledge. They are persons, right? They like to talk with people. I like to just look at numbers. Many people like to talk with people. And if you are that kind of person, just go to different crypto events. Just go to, say, Token 2049 in Dubai or in Singapore. Next one will be in Dubai. I might be there as well, by the way. And just talk to people and learn about things, make friends, and get knowledge and information that others don't have, and make money that way, right? So there's many ways to beat the market. There's many paths to Rome, or all roads lead to Rome. I don't know what the exact saying is, but there's many ways to generate some alpha. Just don't make the mistake of thinking that without the work you will beat the market. Just a minority beats the market. The vast majority underperforms when they try to actively trade, and you need to have some kind of an edge, right? You need to put in the time, and how you put in the time is then up to you. Of course, you can also just join the copy trading vaults, and I hope to beat the market. I have beaten the market in the past, but if I will in the future, of course, nobody knows as well, right? There's no guarantee. But yeah, thank you for the question. Yeah, here, this is the fundamental issue with the altcoins, right? There's so much token dilution. Every week, we have roughly 1 additional billion of selling pressure. And there's not that much demand. There's no stable coins getting into the space. And that's simply just depressing the prices. Yeah, it's interesting. It turned okay at some point. Leggy static. Yeah, if there's any people that know OBS very well, that might know what the reason for the sound issue is. But I will compare the recording here. I also make a local recording at the same time. I will compare the recording locally with the recording done by YouTube and see if there's a difference in the sound. Then we know whether or not it's a network issue. Your voice sounds like Arnold Schwarzenegger. Thank you. Yeah, maybe that's the accent, right? I'm originally from Germany. Arnold Schwarzenegger, I think, is from Austria. I was bleeding from my ears, but I will stay loyal to you. Thank you so much. Okay. What did you eat today? Yeah, I think that's the most important question so far in this chat. But actually, we don't have to take it too serious all the time, right? We have come through all the questions so far. I've also come through all the charts so far, so we can also just have a very simple talk. There's actually one more chart that I want to show you before I tell you that I've not eaten anything. This is the stablecoin market cap relative to the monetary base. And this is not expanding since October of last year. And we talked about this all the time on this channel. I've talked about this in the premium update videos regularly. And once we started to expand, that's when I turned macro bearish. Since October of 2023, we tended to expand. So that's when the bull market started. We shorted the altcoins up until then. We stopped shorting without hedge in October of 2023. But yeah, just have a look at this, right? Since the altcoins, since the stablecoins aren't expanding anymore, there's no more inflows into the ecosystem relative to the monetary base. That's exactly when Bitcoin started crashing. So that's the power of looking at data. That's why I like the crypto market so much, right? When money is flowing into the market, prices go up, and we actually know whether or not we should buy dips, right? We can buy dips when money continues to flow in, but when we are dipping and no money is coming in, things are a bit more problematic. And I like this kind of data points that we do not have in any other asset class. We might have it to a degree in property. Some people make analysis. In traditional finance, we are far behind because the banks and various players have much more information than we do. So as retail investors, we are far behind. But crypto is a bit more of a fair market, as in everybody has the same kind of data. Or everybody can try to get the same kind of data. And so if you put in the time, you will find things like this. And yeah, If there's no money flowing into the space, what should push prices up? That's the big question. Greetings from the US of A. Yeah, greetings. Glad that you're watching and that you've tuned in. Hello from London. Sound is perfect here. Do you ever chat to other influencers like Virtual Bacon? No, I do not. I actually consider doing this. I consider maybe I'll reach out to Ben Cohen. I like Ben Cohen's content quite a bit. We don't always agree on market direction, but I do like his approach to how to look at markets. It's not very different to what I'm doing. So Ben Cohen would be an interesting person to talk to. Can you please take a vlog about a typical day of your life? You are an inspiring person. Oh, thank you very much. Yes, sure. Why not talk about my life? Let me write this down. I do these one-on-one talks every now and then, right? So it has evolved over time. Actually, once you have something to strive towards, right? Once you know, I want to grow this channel, or I want to build this business, or I want to achieve ABC, then usually the motivation, when the desire is strong enough, and when the potential pain that you're trying to avoid is strong enough, you will find ways to organize your day relatively well. But I will talk about this in another video. But one major thing that I want to avoid is going back into corporate life. So I used to work in corporate, in IT development, in IT management. I was in a cubicle doing my tickets. So I can relate to the regular people. I have lived that life for a while, but I didn't like it that much that in the end I worked even more. I did my side hustles on the side. I had my main job, and then after my main job, I programmed for smaller companies on the side on an hourly basis, saved all of that money, invested all of that money, built then also the YouTube channel on the side until I had enough capital to invest, until I had enough cash flow from YouTube that I could then quit corporate. And now I work from home. And now that brings a lot of advantages. For me personally, right, again, because I'm a numbers person, I don't necessarily talk to people much. I talk here to a camera, indirectly to you, of course, but I don't really talk in big groups. I like to talk one-on-one with people sometimes, but I'm not really a group person. And I like to be just at home. I don't like the water boiler small talk. I don't like to be interrupted when I focus on something. I don't like the neon lights of the office. I rather have here this light over here. Yeah, I didn't like the commute to the office. There's a lot of pain that I want to avoid, and whenever you've got something that you want to get out of, you've got a lot of motivation to strive towards and then you just have to have some kind of a target, and then all the other things fall into place. Then sleeping early, waking up early, taking care of your health and going to the gym, all these things fall into place. And for me, it was so far it was the best thing I could have done, right? Financially, of course, but also I don't have to commute to work. I can schedule my time. I have time with the family. I've got 3 kids. I've got time for the kids as well. I've got time for my wife. I've got time for everything. I've got enough money as well. And I've got you guys here supporting me. Life feels much better now compared to, say, 5 years ago. And yeah, if you've got something to work towards too, it's might be worth it. If whatever situation you're currently in is, if you feel that situation to be bad enough, if you feel comfortable, then of course there won't be a change. It's a bit of a problem, right? Because you always need some thing needs to be bad enough to make a jump. And if the thing isn't yet bad enough and it's acceptable, that's actually the worst situation. Either your situation is super great and you like what you're doing, or your situation is super bad and you're changing it so it becomes something that you like what you're doing. But when you're stuck in the middle, it's not great, it's not bad, that sucks because you don't have enough energy to get out of it. And so things don't improve. And I don't have a good solution to this either. Maybe just project of where you will be in 10 or 20 years if you stay on your current track. When you look at your boss, say in your corporate job, and you don't want to be like him, in 10 or 20 years, then probably it makes sense to change life now and not become that person in 10, 20 years. So projecting of how bad it could become in the future might be another tool to potentially find enough energy to change things, because it does take energy to get out of the rat race, obviously. Yeah, but I will make a dedicated video on this. Interesting question. Do you think the Trump tariff ruling from the Supreme Court will trigger another round of selling? I don't think that politics has too much long-term effect on prices. Every now and then we can get a like the tax announcement, right? The reciprocal taxes did create a short-term sell-off, but I'm not a political trader. And the reason why I'm not a political trader is also because I don't have an edge anticipating what happens politically. You can make money with politics if you know the politics before they happen. If you don't have connections into politics, then I don't think trading based on politics makes sense. You want to trade based on something that you know better than the rest. And if that's just raw analytical force because you work so much on it, that's one approach. If it's knowing more than others, that's another. And that's probably what most people do actually. They just know more. They're more informed. They don't necessarily have more skill. Let's take this little picture as a background. I like this. Do you have any goals you still want to reach, like financially or others? Yeah, you always want growth. So this is independent of where you've been financially. And we can always tell ourselves a story that it's not enough, right? If suddenly my portfolio would drop by 50%, could I still retire without sacrificing lifestyle? You know, you could always like tell yourself a story that's unrealistic, but my goal is simply to have a fulfilling life, to have as many nice moments with the people around me that I love as possible, to help my kids reach their ideal life as well, and to have a happy family life. That's probably the main thing. I could lose a lot of money, that's fine, as long as my family stays happy. Unfortunately, there is a bit of a connection here, right? If the finances of the household completely collapse, that brings a lot of stress to everyone, and that also puts a lot of stress on family relationships as well. So money is a lubricant for personal relations always. It makes many parts of life easier. If people tell you otherwise, they probably don't know how to use money properly. But having money is much better than not having money, let me tell you that. If there's not that much money flowing in, market makers can still push prices. This is correct. Yes, this is correct. So shorting the market is always risky. The less liquid a market is, the less activity there is in a market, the more it is at risk at getting short squeezed. What I like to do is I like to avoid the altcoins that are very small in market cap. When it's below, say, 200 million of market cap, shorting an altcoin becomes comparatively risky, and you want to have the stop losses tighter. But then, of course, you get, especially if you move bigger amounts, you get squeezed out easier. You've got more visibility. If let's say an altcoin has a market cap of 100 million and you short it with $1 million, there's definitely going to be a market maker that's going to buy up the spot supply and push you out. So it's always a ratio of how much are you betting relative to the trading volume actually, but an approximation for that is the market cap. If the market cap is too low relative to your position size, you've got a problem. And now that liquidity is coming down, now that trading volume is coming down, manipulation is easier, and so probably the threshold for shorting altcoins should go up. As there's less and less activity in the market, we should probably up our market cap threshold for altcoins to short from, say, 200 million to maybe 400 million or higher. So yeah, short squeezes do become problematic the longer we progress in a bear market because manipulation becomes more frequent. Interesting chart you showed earlier with Bitcoin. Let me see if I still have that. Yeah, over here. Especially the bottom curve. Yeah, exactly. These things become self-fulfilling prophecies, I believe. There's a good chance that if we don't see a financial collapse, that 40 to 50K, somewhere around that line will be the bottom. Have you changed your sleep schedule at all? Isn't 4 in the morning where you are? Yeah, I have changed my sleep schedule over time. I, over the years, tended to start sleeping earlier and waking up earlier because I'm more productive in the early mornings. And the late evenings, I don't enjoy the late evenings anyways. You're already tired from the day, you worked out, you played with your kids, you did your regular job as well. Your brain is almost dead, and so you can't do anything, and so you might as well sleep instead of doing Netflix brain rot stuff. I don't even have Netflix installed. Yeah. So I like to have a fresh brain to do things. That's why I do my work in the morning. But people are different, but that's at least how it works for me. So you're holding until money starts flowing back in. If you sold at the high, where would you put those gains now? Also, where are you getting the last graph from? Yeah, unfortunately, I can't really, I don't really know what you mean by the last graph. The timing of the chat is hard to coordinate, right? I have to go through this one by one. But yeah, I am buying spot whenever we are below the realized price. And I bet on the current momentum, the moving averages. I haven't shown them in this stream yet. Maybe I should. The best moving averages for Bitcoin. I'm betting on falling prices as long as we are below those moving averages. And the ideal scenario is, of course, we just stay sideways for a while. And then what could happen, maybe we going to relive something like this, right? We peak in a bull market, right? End of 2021. We come below both moving averages. We get a bit of a fake out. We already got a fake out from the 44-day simple moving average. And then we go below again. And then we are very far extended from the moving average, but we just go sideways. And ideally, we just see another sell-off again, very similar to June of 2022. And maybe that additional sell-off will then hit the 40K mark. And then we buy aggressively, especially once we go above the moving average, especially once we go above the 125-day simple moving average. So there's always some pain, right? Every now and then we might get fake outs. But of course, the 125-day, the best scenario is always we are below the realized price and we cross the 125-day simple moving average. If both of those are true, then it makes sense to get really, really risk on. That cubicle you were in sounds like it had green tinge with agents looking for you along. Yeah, it wasn't that bad, but it felt like this. It felt like this. Objectively, the reality wasn't that bad, but emotionally, I wasn't where I wanted to be. I don't think I didn't feel like I was in the right spot, getting squeezed in the tram or getting squeezed in the train every morning and every evening, waking up in the dark at night, to then be in the office during the daytime, to then return from office when it's dark at night again, and the day has been sold to a big soulless company that only knows me as a number, and my kids were waiting at home for me to play with them. That's how it felt. It's the dark reality of things, of most people's lives, if you really spell it out like that. Who you know is actually more important than what you know, it seems these days. It depends on what your approach is, right? You can just make money by being very skilled as well. But knowing people that have power, of course, is very good as well. And getting to know those people and making those people friends is a skill in itself. Some people get born into this, but people that aren't, they have to learn how to make those kinds of friends. And I have respect for that as well. If you come from nothing and suddenly you're the good networker and you know everybody and you make money that way, that's good too. Why not? Please chat with Ben Cohen. That would be really interesting. Yes. feel free to, probably a lot of people here are watching both channels. If you are watching Ben Cohen's channel, right, Into the Cryptoverse, if you're watching him, feel free to just comment this down below his videos and like up the video, the comments that say this, right? Hey, have a talk with Gerhard. Then he also gets some attention to that. Then once I reach out, he probably will be more inclined towards having that conversation. So if there's some input on his channel already, maybe this will also help a bit to accelerate things. Money creates your freedom, which affects your happiness. Be careful. Yeah, so some people say money is the root of all evil and things like this. If you believe those kind of things, then don't be surprised if you have a hard time accumulating capital. ETF inflows and outflows control Bitcoin price. No, I tend to disagree. Pi, cycle top indicator, and indicators like it don't seem to work as they have in the past because of this. No, so ETF inflows don't really, I don't think that ETF inflows are the main price driver. It's still the long-term holders that are the main, that drive the price. ETFs hold roughly 6% or so, 5 or 6% of Bitcoin's supply. And the long-term holders hold the rest. I mean, there's also treasury companies, they also hold around 5%. 90% of Bitcoin supply is held by not Wall Street, not by those two entities. And you can see also in the supply change of, say, the long-term holders, how they much more of a, they're much stronger in magnitude compared to the ETF flows. Let me actually show you what I mean. Why do I just talk about this? So when you look at the ETF versus long-term holder flows, so we've got the Bitcoin price in black, we've got the long-term holder flows in blue. And when we now look at the ETF flows, so that's in green, here are the ETF flows. So how important are the ETF flows relative to the long-term holder flows, right? They really don't matter. This is ETF. This is how ETF looks like versus long-term holders. So when the ETFs sell, it doesn't really impact anything. It's the long-term holders that have a much stronger impact. Interestingly enough, though, the recent sell-off was not necessarily by those long-term holders, right? The recent sell-off is momentum, and it's medium to short-term holders that sold. But yeah, just because people tell a narrative doesn't mean it's true. It's always interesting to look at data and verify things. And ETF flows simply aren't relevant enough, I believe. Okay, we are approaching the 2 hours. We haven't yet finished the 2 hours, but still, I think this should be it for today's stream. If you got some value out of this, again, a like is very much appreciated. And feel free to subscribe in case it's your very first time here. Looking forward to seeing you in the next stream. There will be some clips made out of this stream. If you have tuned in later, if you haven't started from the very beginning, there will also be a bit of an edit where I remove some of the empty space. So I will re-upload this as a dedicated video in roughly 12 hours as well. So you can watch that as well from the beginning. And yeah, thanks again for being here. Looking very much forward to seeing you next time. Potentially also see you later in the premium membership if you want to invest, co-invest with me in the different vaults. See you next time. Cheers.